Let's pick it up on the currency markets with David Roman. He's a regional forex reporter with the Dow Jones Newswires. He joins us from Singapore. David, nice to have you with us here. Why did the currency markets basically ignore the hawkishness from the ECB and embrace the more dovish tone that they've consistently got from the United States and then buy dollars?
Well, I think the ECB has a real tough choice right now in terms of whether they're going to raise interest rates or not, and they're trying to keep the market convinced that they will, at least that they will keep that chance if the inflation situation keeps worsening in the Eurozone. But people are not believing that because the economic growth is so bad right now that everyone is really assuming that there will be rate cuts rather than rate increases.
Louisa.
I'm just wondering, David, whether or not you think, I mean, from the sources that you speak to, that the ECB is putting out very different messages than what we're hearing from the economists, and how difficult that's making positioning in the currency markets at the moment.
I think the message from the ECB is as, like most central banks, they're trying to keep markets quiet, and they're trying to reassure investors that they won't be doing anything which goes against the economic grain. But they really have a situation where they would have real possibilities of cutting rates well before they raise interest rates, because there are right now the whole Eurozone is going down in recession pretty soon, and there's some countries, especially the ones in the southern edge of the Eurozone, like the PIGS group, Portugal, Italy, Greece, Spain, they really need rate cuts right now. Some other countries, they don't want rate cuts so fast because they're still concerned about inflation. So I think we're seeing a bit of a tug of war inside of the European Central Bank. Now, they don't want to say that openly, so they will say, we want to keep options open, we still remain concerned about inflation. But it sounds like empty talk at this point, really.
David, what do I need to know about these payrolls? Is it the headline figure? Is it the overall unemployment rate getting near to 6%? Or is it the average earnings I need to focus on the most?
Right now, in terms of payrolls, really, even if payrolls were to be disappointing, I don't think it's going to change much for the currency market right now. The currency market is going to look at the main fundamentals at this point and see whether the current bullish trend for the US dollar, which is the main history really right now in currency markets, is sustained. Payrolls can disappoint very easily because it happens with economic data, but it's just one piece of the data. So you may perhaps see the dollar down for a while if payrolls are below expectations. But I don't think it will be really a very important piece of data in terms of changing expectations.
Yeah. Why is the yen continuing to make gains against just about everything here? Is this the story of the selling of foreign assets by Japanese investors? David, what do you think? I mean, there is no yield advantage in owning the yen.
Well, I think the situation here is one that is common in currency markets. Unlike stocks, you just can't sell all currencies at the same time. You have to keep one. So what people are doing is, given that there's a global slowdown coming up on us right now, people are going for the dollar and the yen, which are the currencies that have been traditionally the most secure. In the case of the yen, I don't think this move will be long-lasting. It tends to be a currency of last resort, but only for a short term, until Japanese investors see somewhere else to invest. Because the thing is, the yields on the yen and on Japanese securities as a whole are really dismal. So as soon as they find anywhere else to invest, they will go for it. And you know, Japanese are pretty crafty when it comes to creating new ways of investing their yen.
David, we'll let you go. Thank you, sir, for your time. David Roman, regional forex reporter at the Dow Jones Newswires. Complete change of gear now. The Duchess, starring Keira Knightley.